All right. Good morning. Still good morning, guys. Welcome to this week's weekly wrap. And we, in the middle of kicking off a new financial year, have Lisa and Anthony joining us. So, guys, we've been doing this for a while. We're all sort of battered and bruised after another financial year, but we get out of bed on the 1st of July and we do it all over again. What comments about the financial year that we've had?
It's been busy. Most accountants, if you're trying to find an accountant in Melbourne at the moment, they're probably all away, all overseas at the World Cup or in far north Queensland, because everything stops from the 1st of July until mid-July. So that's when the accountants get away. But I'm still here if anyone needs any help.
Fortunately, Anthony's still holding the economy, holding the fort together. Thank you, Anthony. Lisa, how's your financial year been? Change it. You weren't with us at the start of the last financial year.
That's it. So I guess I had the quietest one in many ways that I've had in 20-something years because clients that have come across with me, we of course dealt with, but I was only just starting to get involved with some of the existing clients. So I don't have any extra grey hairs from this 30 June that's just passed, thank goodness.
Well, we'll see what we can do about fixing those lack of grey hairs. You hang around with us long enough, Lisa, I'm sure you'll end up with some, like most people do in my world. Now, I thought I'd do my usual market summary, and we'd also touch on the actual year that was from a 30 June point of view. This week, markets. Well, the All Ords is sort of hanging in there in the red, unfortunately. We are up about 0.3, I noticed this morning. But it's been a sort of a tough week for Aussie markets, just off in the red. Nasdaq is up a couple of percent. The US S&P 500 for the first 4 days of trading is up about 1.74. So US has sort of really outperformed the Australian market over the last course of the 12 months to 30 June. And when I do look at the numbers, they're quite drastic. So, like if we take, for example, the S&P 500 in the US, it was up 21% for the financial year that we've had by Aussie terms. The US Nasdaq, the tech heavy index, was up 31%. The All Ords 2.4%. I'm afraid to say. So it has certainly been a bit of a struggle. And I believe this is the fourth straight year that the Australian market has actually underperformed global markets, which is a bit disappointing, but it sort of reaffirms the reason that when we do manage money, we're very conscious of where that money's actually invested. Thoughts, guys, around those sort of drastic performances?
Well, I guess, I think it just leads to that thinking about diversification and ensuring that we do have those global exposures, but not introducing too much risk into the portfolio. And there is a benefit, of course, of franking credits, etc., back here in Australia, feeding into Australian portfolios. But is also, large sectors of well-performing assets that just really aren't here in Australia. We don't have those big AI companies. They're listed overseas or privately owned. And something like Xero, got hit in the last 12 months with fears that AI was going to make software redundant. And, one of our big IT stocks, Xero, has had a bit of a terrible year on the back of that.
And I think it's I think your point to diversification, and whether that's across global and Australian shares, or whether that's more broadly in the way in which we construct portfolios across both an income and growth play, but also across listed and unlisted vehicles. So in terms of having that exposure across a range of things, so not everything's market driven. So we still stick by the adage of when something happens in the US, or they sneeze in the US, Australia catches a cold. Well, clearly there's more separation from their performance to ours than probably what we've seen before. So
Well, Lisa shared an interesting chart with us earlier today that she was talking through with a client. I might just put that up on the screen. Can we see that? You guys see that, the chart? Yeah. So this is the last sort of 12 months, and we sort of threw in gold because gold was a pretty sort of heavy topic during the year, and gold actually came out of the blocks, reached some pretty lofty heights at about 5,000 an ounce, and it's sort of come off a little bit now, but for the year still up about 21% for the year. We talked about the MCSI World shares up 21%. We thought we'd throw Bitcoin in as well. So there's always a winner and a loser in all these trades. Bitcoin has come off from those. I think it was about $120,000 there at one stage, but off about 44% for the last sort of 12 months. In that respect, so just goes to show that markets are extremely volatile, and it's super important that when we are investing that we're sort of very conscious of not having a home country bias, and we would say the same thing if we were running portfolios in the US. You're going to be really conscious of not having that, and trying to sort of identify which areas of the economy are going well, which are not going so well, and trying to direct capital towards those areas. You did mention a few names there, Lisa, and if I look at a couple of the highlighted winners, the materials sector, or better known as the mining sector for some people, had a massive year, particularly around the sort of rare earths and critical minerals, like mineral resources was up 186%, Linus up 115%. Everyone's favorite BHP up 62%. It was sort of finished the year around the $60 mark. Rio Tinto was up about 60%. So, that sector was actually one of our standout sectors. Unfortunately, our tech sector, the limited tech sector we do have in Australia, has struggled a bit off the back of the AI trade, and people now calling it the apocalypse of the software as a service stocks, and Xero was certainly punished. They were off 60%, WiseTech Global off 69%. And in our healthcare sector, some of our darling stocks, if you like, they're pretty much almost pre-printed in portfolios where you have Australian large caps. Cochlear was off 60%, CSL was off 51% for the year. So the real differentiation depending on whereabouts in the economy you are invested, and I dare say has been a more attractive time for stock pickers, the ones that can get it right. And as we know, that's a very difficult process to be able to do so. Now, I did mention cryptocurrencies back then. There has been a bit of noise about I think they call it the financial disclosure documents, guys, that are coming out of the US and around President Trump and the family. This is all alleged, of course, but the financial disclosures are pretty clear as to what's been going on over there, who's making money out of what trades, and some interesting results there. Have you guys been across this news at all?
Yeah, look, been following the US reporting of it. 1,000 pages worth of information just landed, which is the biggest ever disclosure by any president. And it relates to the 2025 year. And, what it's showing is Trump made a heck of a lot of money, over $1 billion off really crypto related things, more so than any other sort of sector of earnings. And, a lot of conflict of interest, sort of issues relating to his own, dollar sign Trump meme and dollar sign Melania meme coins that have been sold. Looked like, if you look for investors who entered into those purchases, which those meme coins were launched a few days before his inauguration. And that the price of those assets went up quite quickly to be worth $15 billion, but currently trading at 400 million. So lots of people have lost a lot of money on those. But meanwhile, millions and millions have been raised in transaction fees for the Trump family. So each time they're bought and sold, they take transaction fees off the top, and we're talking, $500 million plus. So a very significant benefit to him. And he's not too worried if the price goes down because he's taking a cut off the top. Yeah.
Anthony, I see you shaking your head there, mate. Surely there's nothing to see here.
I was just thinking why Jacinda Allen or Alvo won't create their own coin, because they mightn't be in government for too much longer. So that might be the way to increase their wealth.
But, and you could always write the rules to ensure you're untouchable. Yeah.
Oh, it just staggers me with Trump. Like, nothing would surprises me. They say only in the US, don't they?
The irony of all this was, let's say fictitiously, the three of us went to lunch with a client that happens to be employed by an ASX listed company, at a senior level, and we get sort of the idea that, hey, Jesus, there's a lot of good news about to pop up around this company, and we decide to go and trade it. And if we made $10,000 out of the trade, we'd probably do time for insider trading, guys. That's the scary part. But the numbers that we're quoting are not in the thousands; they're in the billions. It's incredible that the world is at this place, and people just seem to accept it.
And this, because this is related to the 2025 year, we haven't yet seen with the 2026 documents what some of those purchases of actual stocks, like share market exposure, right before announcements, like floating into Venezuela and into Iran, etc. What will come of those purchases right before significant events happen to share prices in companies, who benefit from those actions. Yeah.
You reckon we may have seen a few oil companies traded in the background there?
There's journalists in the US tracking all of this, so it will come out when the sales start happening. Yeah,
this is not new either. In the US, there was actually a fund manager that I think they followed the trades of Pelosi years ago, and said, had you just simply followed those trades, you've done pretty well for yourself, I dare say.
Yeah, I think it's quite a famous index, the Pelosi index. Too.
Yeah, correct. Now, there's been a bit of talk around ESG portfolios and how they've actually fared this year. Lisa, have you been doing a little bit of reading about that?
Yeah, look, we're probably going to see a lot of the ESG managers and the big industry funds that have some ESG specific investment options report a pretty tough year. The sector that has been the outperformer for them, software and tech, has been, a significant underperformer this year. For the calendar year, since January, we've seen the S&P 500 9% and the Magnificent Seven not even 1%, 0.2%, opposed to, the 5-year sort of numbers. S&P 500 71%, whereas the Mag 7 did 185% over that period. Yeah, so with the IT and software getting hit, as you mentioned before, Mirko, healthcare is also another one, very heavy in ethical portfolios. CSL, Cochlear locally, but also Novo Nordisk had a pretty bad year after some good runs, on the basis their competitor had some good results with releasing tablet form for their Ozempic style stock, and some other issues with losing contracts to some big state-based contracts over the world. So, the healthcare sector not really being the good big performer that it has been. And of course, generally missing that element of the energy and material stocks. That's exactly
which we were talking about before. What were we talking about? 60% rises in some of those stocks, right. and then we've seen oil go through the roof because of the conflicts around the world. I'm not surprised, but look, it's a sort of a view that we have out of our investment committee. We also run ESG type portfolios as part of our offering, but we do sort of believe that over time we will see ESG portfolios and normal standardized portfolios, if you like, morphing into one where if you don't get the ES and G right, your portfolio is going to struggle anyway. And I think that we're starting to see a lot more of that.
Yeah, and I think very much, big pension funds and super funds, there's no tobacco, there's no uranium, etc. Like there's some elements there that are across every single one of their portfolios, nothing to do with just their ESG portfolios. So there's certainly recognition around those things. One of the fund managers in Australia that's sort of we consider deeper green, which is Australian Ethical. Their balanced fund at the moment holds about 2.5 times as much exposure compared to the index in stocks that would benefit from electrification. Right, that's a very large tilt. But they were hit a bit last year when Trump came out and said, "Oh, burn, baby, burn," and we're not going to support. We're going to pull back subsidies in the USA. That did have a flow-on effect over the world. Having said that, the Australian Ethical Group, saw that as an opportunity to suddenly buy some assets that had gotten very expensive at a cheaper price. Okay, so they saw that as a buy opportunity. And with this, the Iranian war, maybe one of the side benefits will be more awareness of trying to accelerate again that lack of reliance on oil, and therefore see countries ramping up into faster electrification. So yeah, that could be the silver lining over a broader period of maybe the next 3 to 5 years.
Yeah, no. So yeah, it's going to be interesting to sort of see, and it's one of the things that we pull apart when we compare portfolios and see what the contributors and detractors were. And I think some of those themes are going to continue to sort of wash through. That we'll see. Now it is a new financial year, Anthony. I might turn to you. And with the new financial year, as if we haven't had enough changes around CGT and whatnot, there has been a few little tweaks as well that we need to be aware of.
Yeah, so there is nothing that's immediate from the recent budget announcements that's taking effect, other than the tax rates have changed at the lowest income level. So if you're between 18,200 and 45,000, effectively that rate has dropped from 16% to 15%. So effectively, what that means for anyone at above that $45,000 level, there's a saving of $268 from last year to this year. So
don't spend it all at once.
That's roughly one coffee per week. So the other thing that's key from 1 July is effectively the introduction of payday super. So anyone out there that's an employer, hopefully you're all over this. Effectively, simple terms means that when you pay your wages to your staff, you now have an obligation to ensure that you pay your superannuation at the same time. The ATO have very strict policies in place, and they have a team, or a significant team and resources that are going to be behind this in terms of ensuring that you do this and get it right. And if you don't, it is not, from what we can see, it's not going to be a pleasant experience in terms of working through that to ensure that you get that up to date. So yeah, for employees, the good thing is, every time you get your salary within, I think the threshold's around about 2 to 3 days, that superannuation should be hitting your account. So that's good. Is
the technology good enough these days, Anthony, to be able to sort of deal with payday super?
Yeah, a lot better in terms of the clearinghouses and effectively the access, or the money's going into the fund. So ATO do have access to a lot of that data, and they're going to be able to see this a lot quicker. So, and at the flip side of that too is that employees, if they know they're not getting paid, they're going to be asking questions as to why their super's not in there, as opposed to it being on a quarterly basis. So every at the end of 28 days after the end of the quarter, when it was paid previously, now they're going to see it basically when they get paid, whether that be weekly, fortnightly, monthly, etc.
I must admit, when I did hear about this, I was sort of from an investment perspective, I thought that's pretty good. We always talk about dollar cost averaging and not trying to time markets, and you can't help sort of think that if you're only getting 4 contributions into super per year, you're virtually hoping that those 4 quarters that you put it in, the market's not at all-time highs and the like. Whereas this way, you're consistently contributing into your portfolios. I think some of the big industry funds will breathe a sigh of release because cash flow will be slightly better because they've had a lot of outflows this year as well. So the volume of money coming into the system from a allocation of capital and resources is going to be a benefit for them as well.
Yeah, and the thing it's definitely going to be an issue for employers to manage in terms of from a cash flow perspective. It's effectively ensuring that you've got that wages plus super component available every time payday comes around, as opposed to parking it away or effectively spending it and then trying to find it when super comes around and when the super obligation comes around. So, yeah, massive change on that front.
And
the only
go on, mate.
No, go. You're right.
Yeah, I was just going to say on the super front, Lisa, we had a couple of changes to the thresholds and the caps.
Yeah, so indexing has kicked in. 32,500 is the new concessional limit. Up until 30 June, it was 30, a nice round 30,000. And so that indexation does allow, if you're an employee, your employer is probably using up some of that with their super guarantee element, but you can do your top ups, whether that's salary sacrifice or lump sums later in the year. So that should provide a little bit more bang for buck to do check your salary sacrifice level if you're doing a bit of voluntary extra. Being mindful, of course, you might have a pay rise sometime during the year. And then that number is used times 4 to reach the non-concessional cap, and that's therefore lifting to 130,000. So any of our clients that put in 120 grand recently, yeah, it's going to be 130,000 for the year ahead. And that number is then multiplied by 3 for the bring forward rule. So we're moving from 360,000 can be plopped in one go into super to 390,000 can be popped in. So yeah, great to keep having these numbers edging up so we can all reach the magic number of, nice 3 million in super. Thanks very much.
And just a word of warning to people, if you're not sure about these numbers, because they're always changing, they're always being indexed and the like, just ask the question so that you don't run into dramas, come the end of a financial year. And unfortunately, quite often some of these additional excess contributions and don't actually come to light for quite some time, depending on when you do your tax return, when the ATO gets around to it. So better to be on top of this stuff at all times. If you have any queries, please reach out and ask us from that perspective. And I think there was some small tweaks to aged care. Sounded something for the better.
Yeah, look, the substantial sort of discussion recently with Senate and in Parliament has been some assessments of people wanting to get some support at home packages in particular, and that some of those assessments, the assessors have felt have not actually been fair and met the needs of individual people looking for help in the home. So fundamentally, yesterday, the Senate passed a bill. The bill was introduced by Senator David Pocock and the Greens, Senator Penny Allman-Payne. So they put the bill to the Senate, and Senate passed it with the support also of the Liberal Party. Basically, the situation is, if you're looking for support at home or later looking for an upgrade of support at home services, you have an assessor come to your house generally and actually look at your physical surroundings, whether there's a need to improve or have modifications, whether, something like a chair or a bed that might assist you in getting up, or safety rails or whatnot. But also your day-to-day capacity, whether it's mentally or physically, to meet your everyday living needs. So a medically trained clinical assessor comes to your house, they take clinical notes, they go back to their office, they're filling in a system, and basically an algorithm blends in all of that information that they've inputted and comes out with, your level. So your level 1 to 8 is selected by the algorithm, and also any extra allowances for those assistive technologies or home modifications. But the problem is every person is very specific in their needs, their mental position, their physicality. And what's been happening is sometimes that level, a small number of people, but a significant enough number of people saying that the level is not the right one for them. It's not enough. And so it has been, a review process has been possible by the person who's been assessed, or their family support members, right, can actually ask for a review by the governor. However, they're not very well placed to place the argument. And so what this bill was about, it was called the Restore Human Override Bill, and wanting to introduce a second element, which is the original assessor with the clinical capacity, with the medical knowledge, actually now can order the review, right? And the review is then done by third-party humans. So basically just the argument can be best placed by somebody who's actually got the training and has done the assessment as to how they feel, the level that's spat out of the system is not suitable. So this is a big improvement, and sort of is a good opportunity to make sure these aged care changes don't become like a robo-debt situation where the algorithm, drives negative outcomes and there's really nothing that can be done about them. So this was a really good thing that passed. I mean, obviously has to be put into application yet. Look, the downside, why the government wasn't so keen and why that wasn't there in the first place is, of course, a higher level means more funding and more taxpayer dollars. All right. But if you're that person and you're the family member, obviously you want to see the right level of service being able to be accessed. So that's the flip side of the situation.
I was just thinking as you said that, imagine we had, when you call into these big companies and, press 1, press 2, press 3, imagine there was like a press 5 for a human override. I reckon that would be a massive take up where, can I actually speak to a human being? That would be very handy.
That'd be nice. Yeah. And look,
sounds like a bit fairer for people, which is good.
Yeah, and look, it's not the original assessor that will do the override. So that's a integrity measure to make sure that you can't just give them $500 to ask for a review and override it. It does actually, go back to a separate person to look at those clinical notes, the supporting argument, and then potentially override. Yeah.
Well, hopefully some better outcomes for people that need it the most. Let's be honest, and unfortunately, unless people have advocates, in their corner, very difficult to sort of navigate these areas because they are so complex. And
your best advocate in some ways is the assessor because they've actually seen you on the ground. And also, just as a tip for people, especially if you're helping a family member who's having a bit of cognitive decline, book your assessment in the afternoon because that's when people, those cognitive issues are often more apparent, right? People first thing in the morning are often pretty sharp looking and family members go, oh, but normally she struggles with that or he struggles with that. So just a little tip for family members, book an afternoon assessment.
And maybe offer the assessor a cup of coffee, maybe a biscuit if you're feeling really generous, might actually help your cause. Now, guys, we're coming to an end of weekly wrap. We always mention a little bit of sport. I was wiping away the tears before when Croatia got knocked out by Portugal about an hour ago. We still have Australia in it, so well and truly in it, playing Egypt tomorrow morning at some ungodly hour, which is a 4 a.m. kickoff. But really hoping that we can get over the line and get into the last 16.
Yeah, my other half is Argentinian, so he's actually there at the moment. Their Friday night will be our Saturday morning, 8 o'clock sort of kickoff time, I think it is. So I'll be watching back-to-back games. Lucky me.
Yeah, lucky you. Your partner's in Argentina watching football. Love it. That's fantastic. And Wimbledon's going on. This sport's actually going to kill me at some point in time through lack of sleep. Wimbledon's going on. We still have a couple of Aussies left in the third round. The Demon, Alex Demonor, still in, and Daria Kasatkina still in the third round. So hopefully we can go deeper into week 2 of the tournament and have those Aussies playing on the grass.
Well, he is the world number 5, and I was discussing this last night with my wife. I don't think anyone outside of the top 3 in the world, regular Grand Slam finalists, but number 4, 5, and 6, I don't think any of them have ever made a semi-final of a Grand Slam. So, and Djokovic isn't in the top 6. So it's about time Demonor stepped up. I must say, I did watch a little bit of it last night. He did look very impressive. He was a bit scratchy in round 1, but hopefully, yeah.
A few more first serves and a few more aces. He needs a few free points, I think. Yeah.
We used to be a lot better on grass when we actually had grass courts to play on in Australia. That's very rare these days.
But yeah, very confident about the Socceroos. Have a feeling.
Good. I have a feeling that I'll be up. There's prayers. I'll be up probably 6 coffees in by half time, but we're watching the game, that's for sure. Tomorrow morning.
No VAR ruining it like the game we saw this morning and the one yesterday.
Yeah, this is one of those areas where technology is. I don't know that it's actually adding value. It's actually lengthening games and watching players stand around waiting for decisions. Just we're removing that the game of chance and the on the fly decisions, and I think it sort of works against these sports these days, to be perfectly frank. But anyway, they're the rules.
They're a very different thing for the tennis, right? Taking out the line judgment and running across to look at the little clay spot helped that sport, but it's a completely different thing when we're talking rugby and football.
And even then, it was much more fun watching people yell at other people, just probably volunteers trying to call a line, as opposed to where's the robot that's calling this? Yeah, where's the scanner? Too funny. All right, guys. Well, we'll wrap it up for another week, and got to get used to writing the 27 financial year on all of the paperwork and whatnot. But we'll get there, and we'll see you all next week. Thanks for joining us. Thank you to our team who did an amazing job in the 26 year, and particularly in the run up to the end of the financial year. So great work, and look forward to a meeting with all of you during the course of this year.
Just a shout out to Luke. You didn't give him a mention.
Oh yeah, we'll get. Now, what time is it in New Zealand? If we're going to go and shout out Luke, what time is it in New Zealand right about now?
Wine o'clock.
Yeah, it'll be 1 o'clock, and I guarantee you he is in a winery right now, and I find it very difficult to feel sorry for him right about now. But Luke, I hope you're having a great old time, mate. Miss you heaps. We'll see you soon. See you guys.
Ciao.
Thanks, mate. Cheers.